Well, I'm not going to say it was perfect, but it was a heck of a lot better week than it has been. It gave us some great opportunities in the market if we were ready to grab a hold of them, and even showed us a little bit of green. So let's talk about it on this special edition of Friday After the Bell, because it's Thursday. Good day to all my brothers and sisters out there. Thanks for joining in. It is me, Jeff Adams, your host for Thursday After the Bell. Happy Good Friday in advance to you. I hope you had a great week this week. And you know what? It actually was a decent week. It wasn't a miserable week like we've been having in the market. There was actually some green. I can't believe it. And, it actually gave us a chance to come up for some air, a much, much needed chance to come up for some air. And I hope whenever you did have that air that you came up for, you did some adjusting on your portfolio. We do hope that you took the opportunity to change things, roll things, whatever, take on, put off, whatever the case may be. I hope you took some defensive structures to the moves that you had this week. It was nice. The S&P closed in a little bit of a green, and it is a positive for the week. So, which comes off of the heels of a 20% basic pullback, at least in the NASDAQ. And when you have something like that, that is no longer a correction. That's a bull market. So anytime you hear these people out here, and please God, don't listen to news, don't watch these people too much, because it'll just ruin your mind. It'll get you, they're not positive people. They're a negative group of people. So don't listen to them too much. Don't let them get in your head. Let them say what they want to say, take it with a grain of salt, or just turn off the television. One of the best things I ever did was stop watching the news. I didn't want that negativity in my life. And you know what I found? It didn't matter anyway. None of that stuff really affected me. So don't get overly caught up in this. The world is coming to an end. Sell the United States. Oh my God, we're at war with Iran. Because let's just get down to brass tacks. I mean, we're not at war with Iran. I mean, we're America and they're Iran. So really, this is kind of a more about China really than it is Iran exactly. But I'm not a political person. I don't want to get into political talking. But don't let them get you sucked in to, oh my God, oil's going to $200 a barrel, and we're going to be in a complete recession and a depression, and the stock market's going to zero, and the sky is falling, and all hell's breaking loose. And Trump said this, and Trump said that. It's just all a bunch of noise. It's just a bunch of nonsense. They blame Trump for the stock market instead of blaming themselves for being neurotic and selling everything off at the wrong time and everything else that goes along with it. So just play your hand, play your portfolio, and stick to what you know. And don't be sucked into all this noise. So with that being said, we actually had a decent week this week. Oil still remained high, and the volatility in oil is still high, and the volatility in the market's still high, but the market still said, okay, we need to go up a little bit. So when it went up, it's a fantastic time. Like I say, if you had puts that were completely drowning underwater, it's time, I hope you did some kind of corrective action on those. If you had some kind of strangle that was absolutely getting strangled, I hope you made some kind of defensive structure on that. So, if you've got a put, then you can always make it into something. Or you can just sell it off when you have a chance. There's nothing wrong with taking a small loss instead of getting beat down by a stock. Even if you take hold of a stock sometimes from a naked put, if it's $200-300 on $1,000 stock underwater, well, that's kind of hard to come by. You can't throw your covered calls out there, and hopefully your covered calls did very well. If you had covered calls on before this week, hopefully this week you got to take them off. With the downturn that's been going on, covered calls have been going very well. And once again, even if you have to sell covered calls on a stock that is under the price you paid for it, yes, it's extremely dangerous. Yes, it's not recommended to do, but you can do it as long as you stay on top of it. Don't push your luck too much and be happy with a couple bucks. You'll be able to chisel away at some of that you've lost. Now, again, that's a very risky thing to do. And you know what? Let's just say this isn't financial advice. I'm not a financial advisor. I'm just on here and we're talking about structures and strategies and stocks and stuff that happened all week long. So, take it with a grain of salt. overall and take it with your plan. Think about it with your way of thinking. Do you need to make something into an iron condor? Do you need to make an iron condor into a debit spread? Whatever the case, just use that time that the market gives you and that breathing moment to be able to come up for air and change your positions, hedge your positions, or do whatever you have to not be hemorrhaging money. So that's always the best. And caution is should always be paramount in this opportunity. So when you have a little bit better of a week after having so many bad weeks, it's easy for you to think, well, all right, finally, we're above water, we're above ground, we're going up, we're moving towards the future. But the truth of the matter is, it could easily just drop again on Monday after the holiday. So do not start putting on all these long positions in stocks and things, thinking that the market's going to go up, because it could turn around and bite you immediately. So let caution be the rule of the day. Let's just make sure we know what we're putting on and not think we're putting it on just because the market's going up, because we have no guarantee that the market technically is going up. It just happened to go up. But after a 20% decline in the NASDAQ, which is basically a bear market, I think it's time for maybe a bottom to appear. It's time for a bottom to show itself and start working its way back up. Hey, I'm a bull. So I think bottoms should be quick and simple and then just get back to business. Because after all, why not be a bull in the stock market? I mean, the American economy is made to increase. It goes up over time. We are the giant. We're the number one big mamu around here. We're the ones that call the shots, and ultimately our economy is the one that sets the pace. So to invest in the United States economy obviously is a good move. It has been always, and it always will be. So the economy is going up. You have to be a bull, but there are some times when the bears like to rear their head and have their say, and they get to take a victory lap. Whenever you win 1 out of 10 times, that's not a victory lap. That's just luck. So you really can't be too pompous about being right for these past few weeks. But it's all right. It's all right, because you know what? We can become bears too. We can say, hey, if the market's going down, then let me play that market down. Let me put on positions that are advantageous to the market going down. So, we can make money at it too. We don't have to sit there and just get beat up. We can make money. We can not necessarily hedge a position, but we can make money on the stock we're losing money on the way down. So, there's a lot of things that you can do. You reflect on your portfolio in this time. Get in there, dig at it. If you have any short-term stuff, do you need to roll it out? Do you need to close it out? A green scratch is just as good as a win whenever you've been down on a position. Maybe take profits early. Maybe you're a person that takes profit like we do. At 50% ish, maybe a little more. Maybe now during this kind of market, you want to take your profits at 30, 40%, 25. Look, there's nothing wrong with taking a profit. You shouldn't have to apologize ever for having a winning trade and taking it off. So, take your profits earlier. If it's a volatile stock, then yes, definitely take your profits when you can get them in this market. So don't let me like, well, it's 50% is what my usual goal is, and I know it's at 40. What, are we going to wait around for 2 weeks and let all that stuff happen to your stock? No, get out. Establish a new position. You can establish a position based on what the stock is now, maybe even a better position. But don't be, as we always say, married to the trade. Get in, get out, do what you got to do, take your money and run, or take your lumps and get out. Naked calls are extremely dangerous. I don't do naked calls. Rarely do I do naked calls. Naked puts in this market, though, however, are very dangerous as well, because it's been such a down market, and it's not like a straight down market that forms like a thin structure. Thin structures are easily broken. That's when you see just the one line going straight up or straight down. Those are easily broken. But when you have this staggered kind of stair step down, those are more stick around kind of moves. Those are more substantial. They have a little bit better of a foundation, and they're harder to come up off of, like we're seeing right now. So if you got naked puts going on, it's real easy to get underwater on naked puts. And in call spreads, that's why we recommend so much in markets like this. That's why it's so vital for new traders, for traders with small accounts, to protect their buying power at all costs. Hopefully your buying power is doing well after this week. If it's not, you should have secured it. But those cash, the cash that you have, as we say, is oxygen. And if you have a defined risk trades on, then you're in good shape. You know what you was going to lose. You know what was going to happen. Yeah, maybe a full loss, but think about what could have been. You may have had a full loss at this, but it could have been three times worse had you had a naked put on. So, you've done well. Don't beat yourself up if you had some bad trades. I hate bad trades. I hate having losing trades, but it's just part of the game. It's all part of it. And really just focus in on your singles. This is a time not to be worried about hitting home runs. It's time to get those singles in. And singles, doubles, they'll get you into the Hall of Fame, just the same as home runs will. I mean, there's people and everybody in the Hall of Fame, most all of them batted under 333. So a third of the percent of the time they get hits. So, we shoot for a little bit higher percentage than that. But think about it. You just need those base hits. You just need to do what you have to do to keep the money flowing, keep the ball rolling, and just keep reinvesting. And there's nothing wrong with sitting out around. There's nothing. Putting your hands in your pockets is an absolute strategy to do at this time. If you're nervous about the trade, if you're worried about what the market's going to do, if you're unsure about the direction, you can't get quite a beat on it, well then, hey, by all means, just set it out. It's going to change. It'll switch around, and it'll come around for you to what you're looking for. So just plan and position for what you're doing. Always have a plan. If the market goes way down and you get stuck as a small account, what's your plan? What are you going to do? Have you put yourself in a position to succeed? Are you overloaded onto one side? Is the portfolio delta way too high? If you have a portfolio delta that's well over 1% of your total account, then that probably means you're hanging out too heavy on the right side. And you got to balance that back out. It's just all part of a balance. Just preserving your capital, preserving all of your entities that you have, whether they be stocks, crypto, futures, whatever. The preservation of your entire portfolio is job one. And when you preserve your portfolio, then you'll make money off your portfolio. But if your portfolio is just this constant battleground for you, it's not going to work out, and you're going to have a terrible time, and you're going to go do something else. So trust me. Um, get away from all the negative voices. Don't stop positioning yourself through a possible downturn that's coming. Don't get arrogant and put on arrogant trades thinking that the market's stabilized and everything. But the truth of the matter is, we can take a breath. Today, it's not bourbon, it's a lemon jello. So it's a better week. The techs are green. We're looking down here. We've got space stocks today did an amazing job. They're up 5-10% plus on almost all of them across the board due to this excuse me, the SpaceX announcement coming in that the IPO was going to be released. That's going to be an incredible time on the market. That thing's going to shoot up like a rocket. And then I have a feeling it's going to come back down to earth a little bit. Hey, you dare, double analogy. So, but watch SpaceX when it comes out. I say it's probably going to hit and go. This isn't trade advice, but it's going to go up. And then it's going to come back down and find a stable ground. But that's going to be an incredibly high dollar IPO, well over $1 trillion. And you have to wonder, with that SpaceX release, are people that love Tesla and are in Tesla, are they going to then become SpaceX investors? Or are they going to say, well, I'll just take a portion of my Tesla and put it into SpaceX? So that'll be kind of a weird thing to watch too for Tesla, to see how it all balances out for it. Also, looks like real estate and utilities here on the heat map are doing well. Utilities, energy, energy has been kind of, a weird one right now, because with oil the way it is and with spring coming on, it's kind of hard to get a bead on everything. Your natural gas is doing this and oil is doing that. And so, nuclear is doing its thing. It's kind of taking a back seat for right now. But I promise you, nuclear energy will be back in the forefront in no time at all. Consumer defense, it seems to be a place where a lot of people have been hiding. Your places like Walmart, and what else we got looking good today? We got Coke and Pepsi and Costco, all of them looking good, safer place. And if this time scares you, go to your safer place. Go to your real estate, your REITs, go to your ETFs, go to consumer staples and defenses and discretionaries. Go to them and hang on to them. There's nothing wrong with that. Lay into a few good dividend stocks for a little bit. Give it a month. It'll be fine. Absolutely no problem. We're well on our way out of it. For all my futures trader, it's getting that time of year. You might want to look at live cattle. Live cattle should be looking good moving into the summer. We've broke across kind of that 240, 242, 244 line, which I think is kind of important. But there's a lot of stuff going on, and there is, once again, reason to be optimistic. It's easy to get negative. It's easy to get down. But whenever you have a bad week or your portfolio is not doing well or whatever the case, then don't exacerbate the situation by turning on the news or listening to what they're doing on Bloomberg, telling you that, the world's going to hell in a handbag. Forget all that nonsense. It's absolutely just a waste of your time. Go do something that you would enjoy instead of having to put up with all that. So, friends, what a great week that it was, really, in comparison to the others that we've had. I hope you was able to defend your portfolio. I hope you was able to make money this week. I hope it went well for you. So, thanks for coming by. I invite you to like, subscribe, and tune in next week for Friday After the Bell. We'll be talking more stocks. We'll be talking retirement early strategies and having other videos along the way. So enjoy your long weekend and whatever it is that you'll be doing. For you, cheers.